So Intel stock is up 4.89% today, and there are a few different reasons for that. One of them is they actually had a buyback today. So they actually bought back a 49% stake in its Ireland chip factory from Apollo Global Management. So they are expecting this to improve future earnings per share, and obviously this signals confidence in its manufacturing turnaround by making this move. Obviously, they are an AI-based company. They are strengthening their AI position, although a lot of people, of course, see them behind AMD, NVIDIA, and companies like that. So this is one of those where you might see it in like the value investor subreddit or something like that, where people are trying to buy it low. Intel stock kind of plunged around 2022, as you can see here. And a big part of that was because they had a big pandemic boom, and then after that, demand for PCs went down, and they had an oversupply of chips and a significant decline in revenue. On top of that, competitors like AMD started gaining ground on them. Then they started to fall way behind companies like NVIDIA, and they had to do a massive restructuring, slashing 15,000 jobs, or about 15% of their workforce, suspending their dividend, and they had some weak earnings and guidance along the way. So they had a lot of different issues. They had a leadership crisis as well, and then they got removed from Dow Jones. But over the past year, they've been rebounding. They're up 129% in the past year, which is a great sign. Over the past 6 months, they're up 35%. And again, I mentioned they had a good day today, and they've also gone up 15.9% in the past 5 days. Now, if you compare that to the S&P 500, which again is pretty much the gold standard for growth stocks, well, if you were to compare that to the S&P 500, the S&P 500 is actually down about 2% in the past 6 months, up only 16.2% in the past year, but the S&P 500 would have been better over the past 5 years, up almost 64%. So obviously the question is, will this continue for Intel, and is it something that might be worth buying individually instead of just putting more money into the S&P 500? Well, one thing about them, Q4 2025 is the most recent earnings that we have here. Now, they actually beat EPS by 81.51% and revenue by 2.11%. So good signs there. Although quarterly financials, they actually missed. They were down 4.11% year over year, unfortunately. They're also up 33.1% in the past 3 months, which of course is the equivalent of a quarter. It's another metric I like to look at that they don't show on Google Finance. Now, you didn't see a PE ratio on Google Finance, and they have a negative 586 PE ratio on Robinhood, apparently. And I don't know if that's a mistake or not, but either way, it looks like they have not been profitable lately. And then the dividend yield on both says nothing. So they have not brought back their dividend yet, unfortunately. So you are looking at pure growth here if you're interested in Intel, most likely. Now, if you look at their return on assets, it's pretty poor. Return on capital is also poor. I mean, you would like to see multiples higher in both of those categories. So that's not the best. Assets versus liabilities isn't too bad. The ratio between 211 billion in assets versus 85 billion in liabilities is not a problem, in my opinion. Now, as far as what hedge funds are doing, which their entire existence is based on trying to beat the market and getting the highest returns for their clientele, of course, well, they are mostly selling over the last couple of quarters. 71% Q3 last year, 88% sell Q4 last year, so not the best. Although they have some good news, we still don't know what people are doing in the first quarter of 2026 for Intel. As far as what analysts are saying, the consensus among 50 Wall Street analysts is 70% are saying it's still just a hold, 18% are saying buy, 12% are saying sell. So not the biggest vote of confidence from Wall Street analysts. Their PEG ratio is extremely high. It's almost a 19. That's one of the highest ones I've seen probably in the last couple of years. That's not a great sign either. It basically means that they could be still way overpriced considering where their earnings growth is looking. If you look at their EV to EBITDA ratio, it doesn't look nearly as bad. It's an 18.48, which is pretty solid, I would say. they do actually rank better than 58.43% of companies in the semiconductor industry, so not everything looks terrible. As far as leadership here, they have a 3.8 out of 5-star rating. 67% of employees recommend working here to a friend. I'd say that's pretty good. Doesn't seem like they have a toxic culture or anything. And the approval rating of the CEO, it's not super high like AMD or Nvidia or something like that, but it's pretty good. It's better than, say, Tesla or a few others like maybe Meta. But 61% is not like obviously a deal breaker in any way, and they at least have more than average approval of the CEO. So it doesn't seem like their new leadership is a problem. Their company culture is okay. They do have some good news, but is it enough to make up for, say, losing on revenue year over year over the past quarter on their earnings call? Are they really past the whole turnaround phase, or are they still in the midst of their turnaround phase? And again, Wall Street analysts don't seem to be sold on them quite yet. Most of them are just saying hold, but they're not saying that it's a fire sale either. But maybe the sign that they spent $14.2 billion to buy back their Ireland fab stake, maybe that's a sign that the company has confidence in where they're going and that they like the direction they're going. But you don't get a dividend yield from them right now. You don't know if that's coming back, and you are looking at some pretty big red flags for their PE and their PEG ratios and their quarterly financials in terms of revenue by itself year over year. And it still seems like they're behind companies like Nvidia, TSMC, AMD, etc. So you might already have some of those in your portfolio, and would you really want to add more AI or chip related stocks to your portfolio? In my opinion, if you already had those, I'm not really sure why you would yet, unless you are betting that Intel is going to outperform them over the next few years. So if you're trying to convince yourself to buy, I would say you're trying to say, well, just look how they're doing over the past year. You have some signs of growth, or you have some good signs that the company believes in what they're doing. Maybe they've figured out the leadership problem that they had. They did beat on EPS and revenue. If you're trying to figure out, well, maybe I should just hold, I would say you're agreeing with most analysts right now, the consensus among 50 Wall Street analysts, which is not always the worst thing to have on your side. You probably don't want to sell necessarily because you see how they're doing over the past year. You see some positive trends, although not everything, especially revenue, is catching up yet. But if you're trying to convince yourself to sell, you're probably looking at this like, well, I could probably do better in other AI stocks long term that are going to be the winners of this race. Or maybe you are trying to diversify a little bit more and you're trying to not have too much into chip stocks right now. So everybody's different. Everybody's portfolio allocation is different. You know, how old you are, your timeline. A lot of these things will determine on whether or not this is a good buy, hold, or sell. I can't tell you that right now just making a video, but I can tell you how to think about it and how I would go about it. Right now, I'm not really looking at buying Intel just yet. I don't actually have any Intel, but I do have other stocks that compete with them. So I'm not so sure I've seen enough for me to jump in and buy another one in the same category. None of this is financial advice. Please do your own research, maybe even consult a financial advisor, and I'll see you in the next video.